Welcome to Living Your Greatness. Each episode, we bring on great people to inspire you to achieve your greatness. We discuss topics all related to health and wellness. Listen to world-class stories, learn valuable lessons, and turn knowledge into action. It is now time for you to unlock your inner greatness. Welcome back, everyone, to another episode of Living Your Greatness. This is your host, Ben Mummy, and today we have a new guest to the show, and his name is Justin Huhn. So for those of you that don't know Justin, he's the founder and publisher of Uranium Insider Newsletter. Justin has been researching the uranium market for the past 5 years and has thousands of hours of research under his belt. Justin has been trading the markets for close to a decade, having learned to invest with technical trading, more specifically trend following. Justin was taught by a long-time veteran momentum trader who took him under his wing. This combination of in-depth fundamental analysts in the uranium sector and experience with technical analysts gave birth to the Uranium Insider Newsletter. So Justin, it is a pleasure to have you with us.
It's great to be here, Ben. Thanks for having me on.
So Justin, let's kind of get kicking here. Let's start with your background. Tell us more about your formative years growing up in the United States. What led to the birth of the Uranium Insider Newsletter? And what inspired you to become a newsletter writer?
Great questions. Well, I'm born and raised here in Southern California. I'm still here, despite the fact that most people that I know and love are moving out of the state. We'll be here at least a little bit longer until my stepdaughter is out of high school. So at that point, we'll see. But let's see, how can I lead into what led me here? In my late 20s, I started farming with a couple of friends of mine. This was sort of an opportunity that just came to us out of nowhere. I had always really been into gardening for whatever reason, just kind of a love for the outdoors and the love for food maybe combined. And we had the opportunity to rent an acre of land for like $100 a month. So me and two buddies just started digging in the dirt and planting vegetables. And that was something we were very, very idealistic at the time and also very environmentally concerned, let's say. So we really wanted to find out what could be done as sustainably as possible without just throwing that word around, knowing that it's very difficult to actually reach true sustainability. We're still using plastic piping for irrigation and, importing fertilizers, whatever it might be. But our big problem that we were trying to solve was cultivating something larger than a backyard garden without using mechanization. So we spent the first 2, maybe close to 3 years doing, cultivating an acre of land just by hand, to the point where we were actually producing food and selling memberships to a community supported agriculture program. People would pay every month and then receive a box of vegetables every week, kind of thing. We were doing that all by hand. And eventually we ended up going to a small mechanized, like walk behind tractor that would, chop up with a, what is it called? A flail mower, and then till the ground. And so we got to the point where we were really cultivating very efficiently, though we kind of got over that idealistic viewpoint because it was exhausting. And we knew that a small amount of mechanization could bring far, far greater returns. Got interested in growing saving seeds and ended up starting an organic seed company. That company is still up and running. My former business partner is still running that company, although I sold out of it at some point, I think 2015, if I recall. But at some point during the course of my farming experience, I got interested in investing. I don't remember exactly why. I think I got interested in Apple stock. It just kind of came up in conversation. And this was, when was this? This was maybe 2011. So yeah, that was really interesting. So I was actually trading momentum trading on my phone 2012 while I'm out in the field farming. And at some point, that experience of trading, I think it was sort of the feeling of like that gambling kind of feeling that was attractive for some reason. It really helped me to actually start to save money in a substantial way. Just having that, and maybe it's not the gamble and the risk part of it, but it's the it's the constant interaction that was drawing to me. I felt like I could tip the scales in my favor by educating myself. During the farming experience, I had taught a lot of courses to the local community on growing food and on saving seeds and things like that. And I think I just realized at that point that I was a good educator on subjects that I really understood well. And it just came really naturally to me, being able to speak on something that I feel that I have a good grasp of. So as my technical trading, momentum trading did fairly well, I was pulling in, annual returns in the 30 to 50% range for the first few years, which is really, really fantastic. If you can do that year over year, that's along the lines of the best investors of all time getting that type of returns. Though, I was still an amateur, but I was taught by somebody who had very, very strict trading rules. And he was adamant about sticking to those rules. And he really put that into me as far as my own practices. In 2016, I learned about the uranium investment thesis from a podcast. And it totally hit me from a 90-degree angle from the type of trading that I had been doing in the past. The type of trading where you're looking at charts purely unbiased with no knowledge, ideally no knowledge about the company or the sector, the balance sheet, anything relating to the fundamentals of that company or the sector. You're just looking at the chart and you don't want anything else to come into your mind to influence the trading that you may or may not do based on this chart. So that was kind of how I was brought up in terms of trading. And then this uranium thesis came to me, which was, here's this sector that everybody hates. It's been in a brutal bear market forever. This contrarian type of fundamental investing that I had never even really considered up until that point. And I've always enjoyed perspectives that go opposite of what my own personal perspective is on something. So if I think a certain way on any particular subject and somebody brings an intelligent argument to me on the opposite side of things, I love it. Like, it just lights me up, and it's like, oh, I've been stuck in this mind frame, but there's this other thing that exists. And when that came to me, I was like, oh, this is interesting. And then I started to look at the previous gains from the previous bull market from people that made, 50, 100, 500, even 1,000 times their money in 3 to 4 years. And being somewhat familiar at the time also with cryptocurrencies and that type of volatility that was attracting me as well, I was like, okay, so this has the potential to do that again, maybe. Let's start looking at this. Let's dig deeper into the sector. Let's find out. And I just kind of turned on full geek mode and started researching as much as I could. I was just getting onto Twitter at that point, and there was a very small community of uranium bulls in the 2016 timeframe, and maybe a couple of dozen people. Over the course of about a year, I felt that, okay, yeah, I'm into this, and I'm going to start allocating money into the uranium sector. That was 2017. I found myself part of this small group of people on Twitter that were really interested in uranium and knew a bit more about it than the average investor. So I started that Uranium Insider page, not really knowing what I would do with it at the time, but it sort of organically grew into kind of like a quasi leadership role on Twitter, with more and more people slowly coming to the investing thesis and having discussions in public and through direct message. At some point, I felt like I had more to share than what I could really do efficiently on Twitter. Started a free newsletter and started putting out content. I did that for about a year, built up a sizable following that way. And in 2019, the summer 2019 is when things started to really sort of shift. And a lot of the people who were receiving the free newsletter were asking, Justin, what companies are you recommending? If you ever do a paid newsletter, sign me up immediately. Let's, get into this. That just kind of led to the inception of the Uranium Insider Pro newsletter. August 2019, I started that. A little over 2 years later, it's grown into something substantial, and it's been a really, really awesome experience so far on all fronts. We've obviously done a lot of work on the sector to have the type of conviction that we have. Also, we've gotten very lucky in terms of some of these fundamental developments that have really moved the sector favorably. So our members have done extremely well in their returns, and so have we. And so I guess that's a long-winded way to describe of how we got to this point.
Thanks a lot, Justin, there for taking the time to share your whole story, right? I know a lot of people in the investing world know who you are in terms of uranium and all that stuff, but it's really nice to hear your background of, how you went from farming and then slowly having that passion or that introduction to investing, and then going from there and developing that contrarian mindset. And I do also want to applaud you too, because it takes a lot of courage, even if you have that conviction, to hold through those hard times. But now it has paid off, or at least it is starting to really pay off, seeing already right now within the last couple of years, like the gains that have been happening. So yeah, Justin, thanks for sharing that background. And I kind of want to transition now to my next question, which is, uranium stocks are on fire now. Yes, there's been a little bit of pullback in the last week, but they are overall on fire. Uranium spot prices have shot up 56% this year to $47 a pound. What is driving the price up, and how sustainable is this rally?
What's driving the price up currently is a much greater purchasing volume coming into the spot market by what's essentially an end user. So that would be the Sprott Physical Uranium Trust. And of course, there's other players in the spot market. There's still traders. I don't think there's a lot of utility activity in the spot market per se, but there's traders, there's other hedge funds, there's other players that are increasingly purchasing physical uranium for the purpose of buying it and holding it. And the Sprott Physical Uranium Trust in particular is essentially an end user. They are not going to be selling this uranium back into the market. And so most of the spot market volume in the past was just trading back and forth. So 80% of the volume in the spot market is traders trading the pounds back and forth, and trying to make money on small moves, on changes in interest rates, on all of these sort of things, picking up pennies in front of a steamroller is the way somebody in my circles have put it before. But now that the bulk of the volume in the spot market is currently purchasing by an end user, that's completely changed the game. And so what the Sprott Physical Uranium Trust has been doing, really quick backstory, they took over the Uranium Participation Corporation Fund, which was established in 2005. They changed pretty drastically the methodology for the fund, turned it into a physical trust. They have an ATM at the market financing vehicle, which allows them to issue shares into the open market at will, as long as they're trading at greater than a 1% premium to their net asset value. And so they've been doing that almost every day, raising cash by issuing shares into the market. They've raised almost $750 million, right, since August 17th. So about 10 weeks or so, $750 million they've raised. And they purchased almost 17 million pounds of uranium. So they've been an absolute powerhouse. But the primary reason the price has moved so drastically is because not only have they been pulling those pounds out of the market rather than those pounds being traded back and forth, but they've been requiring short-term settlement of those purchases. So the spot market purchases are any purchases that have delivery or settlement within 12 months. And what Sprott Physical Uranium Trust has been doing has been requiring settlement in less than 60 days. And what that does is it proves out what is sitting in a can at a conversion facility that is for sale and at what price it's for sale. And of course, there's some production constantly coming into the spot market, 1.5, 2 million pounds a month, roughly, from primary production. But considering they've purchased 16 million pounds in less than 3 months, that vastly is outpacing the number of pounds that are coming in from primary production. So this is a new major buyer in the spot market, and it's what's pushing the price and sustaining the price currently. With that said, we're also seeing the rise in the long-term price of uranium that had one of its largest jumps in its history last month. They only report, the previous month, once a month, the changes in long-term price. So that's jumped up from the low 30s to the mid 40s now over the course of just a couple of months. and all of the other elements of the fuel cycle, enrichment, conversion, they've all been moving up as well. So overall, the entire fuel cycle is firming up based on not only this new demand coming from the financial players, but also from the utilities sort of waking up and recognizing that it's very likely we'll see much higher uranium prices in the short term and wanting to secure deliveries out into the future and locking in prices.
Absolutely. Well, thanks for that answer, Justin. And given the amount that Sprott has been able to purchase, it leads one to believe that there has not really been a significant shortage in the spot market. Do you think this is true? What are your thoughts?
I think that we've taken a long time to work through the excess supply that was the result of Fukushima, essentially. Well, Fukushima was the major catalyst of demand dropping quickly by more than 10% between Japan and Germany, followed by many years of production continuing at that pace and even increasing, in particular with the Kazakhs over that time period. In the early and middle part of the last decade, when they were still 100% state owned, and there was a lot of money to be made based on the depreciating tenge, which is the Kazakhstani currency, relative to the US dollar, which uranium is sold. So they had inputs in tenge, selling in US dollar, and they were just pumping it out, state owned. They've now IPO'd and are 25% public, I believe, if I recall correctly, and are showing far, far more discipline. And I think they actually want to see prices rising here. So the strategy has gone from pump it out at all costs to make money on this currency arbitrage to be a disciplined, respected player in the nuclear fuel market. So, we had at least a couple 100 million pounds of excess supply that was available. It didn't go to China, let's say, and was being sold in the uranium market over the past almost 10 years following Fukushima. And that took a long time to work through. There's something called the carry trade that was and still is, but it's declining pretty quickly here. A very popular way for utilities to secure pounds. Previous decade, there were a lot of long-term contracts that went out 5 to 10 years. And the utilities were taking delivery in that for a very long period of time. Once those kind of started to run out over the past few years, and utilities wanted to just bolster some inventory or make sure they were covered in a shorter time frame, 2, 3, 4 years, they were engaging in what's called these carry trades, where a carry trader would promise out delivery for a couple of years, down the road, 2, 3 years, uncovered, knowing there was a huge amount of liquid inventory accessible to them. And they would add their cost of capital, add, some premium based on the risk they're taking, based on the future potential prices for uranium that they would need to cover. And then they would source that uranium, some of that mobile inventory that was just liquid in the market, and deliver it to utilities in the future. That happened excessively over the past 5 years, and it's really declining currently, not only because the market is really thinning out, but because these price moves are so volatile. It's very difficult to confidently make a carry trade here and add in cost of capital. I mean, what is the price going to be in 2 years? Does anybody know? So, but that same carry trade that did a lot to clear out a lot of that inventory over the years also really hurt the producing companies, because we had all this inventory sitting here and these carry traders were making a killing, and the utilities were like, why are we going to sign a 5-year contract with Cameco at $45 a pound when we can buy uranium 2 years out for $30? Doesn't make any sense. So they continued to do that until they really couldn't. And we're reaching that point now. It's just a very slow, it's like turning a freight tanker around 180 degrees. It doesn't happen like that. It really is a slow turn. And so is the spot market thin? Yes, but it's not just a static, it's not a bucket that never has anything added to it. There is pounds coming in to the spot market consistently, like I mentioned, 1.5, 2 million pounds a month. But when the buying volume is what we're seeing now, much of that mobile inventory has been worked through. And before Sprott even came into existence in terms of taking over UPC, it was based on our own supply and demand modeling that we've done over the years. We expected the bulk of that mobile inventory to be worked through the course of calendar year 2021. And so it is kind of lining up.
Well, Justin, thanks for giving that background. You did a really good job at explaining the whole supply and demand in the uranium market. So Justin, I recently listened to an interview with Jake Ducey. He did it with Craig Perry. I don't know if you watched it, but what struck me was Craig's conviction that uranium spot prices will hit $80 a pound by year end. What factors could derail the current momentum to these uranium prices?
Well, I think the biggest factor based on what we're seeing in the spot market and the primary driver of the price in the spot market being the Sprott Physical Uranium Trust currently, the biggest factor that could curtail that type of move would be a lack of investment funds coming into that vehicle, because that is really what's dictating the volume of their purchasing. So you have to have buying pressure to get that trust to trade at greater than a 1% premium to NAV, first off. And then they're only able and willing to issue shares into the open market at around 50 to 60% of the daily trading volume. So once they're at a 1% premium to NAV, the volume that comes into that trust really dictates how much money they can raise and therefore how much uranium they can purchase. So that's the primary factor, is will investors, and when we're talking about the type of volumes that will allow them to raise, they've raised $90 million in a single day last week, or was it 2 weeks ago? When we're talking about that kind of volume, that's institutional money. And so really this move is contingent on whether or not the institutional money will continue to flow into this vehicle and will at this point come back into the vehicle, because it's not happening currently, like today, but or this week really hasn't been a whole lot of buying volume into that vehicle. But these things cycle up and down all the time. And we're in a bull market. You have higher high, higher low, higher high, higher low, and rinse and repeat over and over and over. I believe that we will resume that trend shortly. How Mr. Perry comes up with that particular price target, I don't know. He is an extremely connected person. He's the former CEO of ISO Energy. He's currently with Vizsla Silver. He's done very well for himself. He probably knows what he's talking about, but so maybe he knows something that some of us don't, in terms of his confidence that the money will come into that vehicle again, because that's really going to be the primary driver. But also the seasonality for uranium, which typically happens right around now-ish into January, February, most years, is really based around a lot of nuclear conferences that happen in the autumn. So we have a really slow time during the summer, typically, where fuel buyers are on vacation, not a lot is happening. The broad market's usually kind of weak. The resource market's usually kind of weak. Then they come back in the autumn. The U.S. utilities have a fresh budget on October 1. Their fiscal year starts October 1, and there's multiple nuclear fuel conferences in the autumn that they attend and kind of make their decisions around how they're going to act going forward. And it is the U.S. utilities that are the most uncovered globally in terms of future coverage of their deliveries of uranium. So now that we're seeing bipartisan support of nuclear in the United States, we're seeing life extensions being enacted in a number of the plants that were potentially coming offline. I do believe that we'll see that move seasonally. And of course, our general investment thesis is not based upon whether it's going to move in the next 3 months or not. We're in this for the long term, and the long-term thesis for uranium is extremely strong. But that type of price target, I'm not going to make that price target, but I would be happy if we reached it. And I wouldn't rule it out. I absolutely would not rule it out, but I'm not betting on it also. I'm betting on a 2-ish year likely price spike of the spot price of uranium, and then also on a multi-year uranium super cycle based on everything that we're seeing going on globally, with energy crises in multiple countries, with nuclear finally getting the recognition it deserves for its reliable power. More than anything, just the reliability that it can run 24/7 at 90-something% efficiency with a very concentrated fuel source, and bonus, it's emissions free. So all of this is sort of coalescing, but of course the Sprott situation makes the short term far more volatile, far more speculative, and much more likely to to create a price spike of some kind.
Can you comment on the push to cleaner energy or to a carbon-free energy world? Is there a two-way government support in the US for uranium?
Yeah, there is. I mean, currently we're at least seeing members of Congress in the United States on the Democrat side of things. A few members reach out and say that they're in support of it. And more and more, we're seeing that the most vocal in terms of concern about carbon emissions, the likes of the AOCs of the world, and that are saying that we have 10 years left to live on the planet if we don't cut our carbon emissions, things like that. I mean, I wouldn't say that myself, but when they originally came out with this sort of alarmist language, it was coupled with nuclear bad, where we're for shutting down nuclear and going all out renewables. Also, carbon's going to kill us all in 10 years. And it's just like, yeah, you can't have both of those things. You just can't. It's one or the other. So we're starting to see that language shift, and we're starting to see an embracing of nuclear by the environmental left. It's slowly happening, but it's happening in the States. We're also seeing in the EU, multiple countries coming out in support of nuclear being accepted into the EU's green taxonomy, which would essentially allow for funding and greater support for nuclear in the EU. And then, of course, in the East, we're seeing China and India go all out because they understand the importance of energy security, the ability to store uranium and nuclear fuel. It's so concentrated in relatively small space and secure decades of energy. On top of, air pollution is primarily, they're not necessarily concerned about carbon, but literally cities being choked off with air pollution. So overall, it seems like the move towards nuclear being embraced as clean energy is growing and growing quickly. One of the effects of this is, well, obviously one of the effects is expected future demand from, nuclear being embraced, but also the innovations of the small modular reactors is super exciting. And that's something that's just in its infancy. We have multiple companies. We have Rolls-Royce, we have GE Hitachi, we have NuScale, we have TerraPower. There's probably a dozen others that I'm not even thinking of currently that are coming up with really, really amazing technological advanced designs on these small reactors that are essentially meltdown proof. They're extremely efficient. They're much smaller than a classic reactor, so which is average maybe around 1,000 megawatts, and these things are anywhere from 50 up to 300, 400 megawatts. It's a really exciting space, and there's many countries that are kind of in this arms race sort of to come up with new technologies in the SMR field and to get these coming online. And they really make a lot of sense in many ways. The modular factor being able to be mass produced in a factory and shipped in pieces and assembled on site, being able to plug into smaller grids because they're not these massive, multi-billion-dollar, decade-long construction projects. And then the ability they can cycle up and down. Some of these designs can cycle energy up and down much easier than a classic nuclear plant. So like the Natrium reactor from NuScale is 340 megawatts, and it can cycle up to 500 megawatts for, I think it's 5 hours at a time. And that makes it far more appropriate to coexist in a grid with intermittent energy sources like solar and wind. So it could be a fantastic coupling with renewables. It's an exciting space for advanced nuclear.
Justin, what about the public opinion? Have nuclear power safety issues been addressed fully? And if so, how?
Have they been addressed fully? I think that there's certainly been attempts to address them as fully as possible. I think that the sentiment that was hit from Fukushima has taken a very long time to come back from. Even though nobody was killed by that incident, it was still a shocking thing to the world. And of course, the news media blew it up into something far, far worse than it actually was. But on the positive side, that event caused not only Japan, but most places in the world with nuclear reactors operating to reassess the safety elements and make sure that the safety elements were redundant. In this case, for Fukushima, their backup energy source to keep the water circulating to cool the reactor core is what failed. It was a diesel generator that flooded. And so that might seem like something obvious to uh, when you think about it in hindsight. But because that happened, all of the reactors in the world are far more safe now than they were before that incident. So that's kind of the that's sort of the the bright side of what happened there. I think that it's slowly happening. There's still even in countries like France where they have 75% of their grid coming from nuclear and they have the cleanest energy and one of the cheapest energies in all of Europe. You still have a lot of people that are against it. And that's not only because of Fukushima, that's because of impassioned lobbying coming from the fossil fuel companies under the guise of green energy and environmental concern. So you'll have, the likes of Greenpeace, et cetera, coming out against nuclear, impassioned against nuclear. And if you follow the money back, they're actually getting money from the fossil fuel companies, because the fossil fuel companies are the biggest benefactor of nuclear shutting down. Every time a nuclear plant closes, you have to replace it with something baseload. So you can't replace nuclear with solar and wind. You just can't. You can pretend that you are, but that solar and wind that you're replacing nuclear with has to also have fossil fuels with it to be able to cycle up and down to keep the grid stable when the sun's not shining and when the wind's not blowing. So I think that there's been a lot of people doing some really good work trying to educate the masses on the importance of nuclear going forward in terms of clean energy. Michael Schellenberger is one of them. The founder of Greenpeace, I'm forgetting his name, Patrick something, has come out as an impassioned advocate of nuclear. So that's kind of an interesting twist.
This makes me think about big names that are kind of advocating here. And I know Bill Gates has said the next energy miracle is nuclear energy. And that coming from Bill Gates is a pretty big deal. Having an advocate like Bill Gates for nuclear energy, do you think this helps?
Yeah, I think it helps. Yeah, for sure. I mean, he's become kind of a polarizing figure over the last 18 months due to his involvement in vaccines and how that's become a point of contention between people, and he's become a much more of a divisive figure than he was 2 years ago. But I think that it's understood that he's an intelligent person and he's obviously technically innovative. And I think that his points on nuclear support have definitely given a public, a very public, how can I say this? He's been very outspoken about it. And that's been a positive thing because the points that he makes about nuclear are obvious to you and I, but they're not necessarily obvious to the general public. So that's definitely been a positive for sure. And he's behind, he's a co-founder of NuScale, that's building that Natrium reactor. That's going to be, I didn't mention that, but it's potentially going to be constructed and plugged into the grid in Wyoming in as soon as 5 years. They're seeking construction permits 2 years from now. And it should be built within 3 years. So that would be the first one in the States, and his company is behind it.
How was the old uranium spot price per pound challenged in the past? And what made it fall from a high of $147 per pound after 2007, 2008?
How was it challenged? That's a great question. Well, first of all, the price rise came from primarily the rise that went far beyond what was logical was created by financial speculating. That was, hedge funds buying uranium essentially. Now we did have utilities largely participating in that run. So it wasn't only financial speculation. We had multiple events that triggered a perceived supply shortage. That was MacArthur River flooding. That was Cigar Lake flooding. That was there was a natural disaster event at Langer Heinrich mine. Excuse me. So there were a number of events that gave the utilities the perception of concern, or gave them a concern about future supply. So there was a lot of purchasing, not only by financial players, but also by utilities leading up to that $100 a pound range. We did have some utilities actually signing contracts at $100 a pound and greater. But for the most part, once we went from 100 to 134, or whatever it was somewhere in that ballpark. That was largely financial players squeezing that. And so what rejected that? I don't know. That was right about the tipping point of the overall broad markets. And so really what capped the price at that point was the people that were buying the uranium at the time, which was the financial speculators, started to sell uranium. So a lot of those hedge funds just started to sell uranium at that price point based on whatever factors they, influenced them at the time, which largely was the perception that the overall markets were about to turn, which they did, obviously. So they probably timed it pretty damn good, which they usually do. And so when they started selling uranium back into the market, that marked the peak and the fast slide down, because there was nothing really to support that $100 plus price. Fundamentally speaking, there was nothing really that would cause utilities to just come in and keep slamming into the market at $115, $125 a pound. That was absurd back then. That was really, really high pricing based on what utilities could afford for their own operations. So the move from $140 down to 100 just went like that because there was nothing fundamentally to support it. And that's likely, something like that is likely to repeat, even though the primary buyer here won't be selling. There's still going to be a point at which all of the players in the nuclear fuel markets are like, yeah, we're not doing this, or we can't do this. There are utilities that operate in deregulated markets where they have to compete in terms of the pricing of their energy. And so when we get into those prices, we're going to see different types of dealings being made. We're going to see different types of contracts. They're not going to be 60% reference to the spot price when the spot price is $130, whatever it might be. But we are very likely to see an overshoot in price that goes far beyond what is fundamentally justified.
That makes a lot of sense. So how does the current economic picture impact the uranium picture moving forward? And what if there would be another economic downturn, such as the 2007-2008 recession?
When there's a big enough crash in the overall markets, everything gets taken down with it, with an exception of shorting. So there was nothing really that hedged a crash like 2007, 2008, or even kind of the smaller crash that happened last year in March. You couldn't really hedge with anything besides cash or just being short. So with that type of liquidity crisis, nothing is safe. Okay. Besides obviously holding cash. And uranium is no exception. Now, if the uranium spot price is in a rip roaring bull market, it likely is to fall less than, other, overvalued tech stocks, for example. And I think in general that the coming years is probably going to be a very strong trade for all things commodities and energy. We've just started to turn. I'm sure you've seen these charts showing the S&P 500 versus commodities and the how it's just like this giant gaping alligator jaws, and it's just starting to go boop, just barely turning at this point. And I think based on looking at around the world and seeing inflation, and the price of commodities skyrocket and energy crisis in multiple countries, that this is likely going to be a very, very strong commodities market. So I think that there is going to be some relief or some semblance of safe haven within those sectors, of which uranium is one. But if it's a true liquidity crisis, people usually take money off the table and whatever they're invested in.
Is it possible that the current move to decarbonization is too aggressive? Do you believe a situation like that could swing the pendulum back from uranium to increase oil and gas as usage?
No, it's unlikely, because first of all, the sunk cost in building a nuclear reactor is huge. And reactors that have already been constructed and are under operation are unlikely to be shut down in favor of fossil fuels. So because they're already up and running, so the bulk of the cost of the operating this thing for its entire life, which will run, 60, 80, maybe even 100 years, is sunk in the construction. And so the operation of that plant is a small amount of input capital relative to the construction of it. So the reactors that are up and running are going to likely continue to be up and running, with some exceptions. Germany is still planning on shutting down their last 5 or 6 reactors next year. Although there's increasing speculation, it's still a minority that think this, myself included, but there's increasing speculation that they could possibly reverse course and keep those plants running, which would be an unbelievably huge signal, because Germany's, they really made a big mistake in closing down their nuclear plants and putting so much money into renewables because it just hasn't worked for them. So no, I think that if anything, the climate pledges that are happening are just increasingly in support of nuclear, and the fossil fuel prices are likely to continue to climb. So that only helps nuclear, really.
And so this actually leads me to my next question. What is the upside for the uranium story in the US infrastructure bill is passed this year?
Not much, really. I think the biggest upside for the states has to do with life extensions for the reactors. I believe that there still is a carryover from Trump's nuclear fuel working group where he wanted to establish a uranium reserve. I believe there's funding in this infrastructure bill to have that, but we're talking pretty small potatoes in terms of buying uranium from domestic miners. So it's not something that we're counting on. The biggest deal is support from the government for life extensions for the existing reactors. And I believe in the bill, there's kind of this very broad general amount of money for support of nuclear that is going to go to the operators of these plants. At least part of it will. So we are going to see more support for the existing plants, and that's a big piece of the thesis for sure.
After all this talk now about uranium, as an investor who's listening to this podcast, what is the best way to invest in uranium equities, or is it royalties, or is it trusts? Do you have a few equities that you would recommend?
Well, out of respect for our paying newsletter subscribers, I usually don't discuss our recommendations in terms of companies, but in terms of the type of company to invest in within the space, it's really a personal decision based on your own amount of capital you're investing, the liquidity that you require, your goals, how much risk you want to expose yourself to. For example, investing in something like Yellow Cake PLC in London or the Sprott Physical Uranium Trust. These are two funds that hold physical uranium. So if you want to just invest in exposure to the commodity itself, that's how you would do it. And that's probably the safest bet in the entire space, is just betting on the fact that you believe uranium will go higher, period. You have no risk related to individual miners, right, that have problems with jurisdiction and with capital fundraising and dilution and all of these things. So there's that. I guess the next safest and easiest way would be the ETFs. URNM is probably the safest, not the safest, excuse me, the best ETF in the space because they're 100% allocated to uranium, whereas URA is only 70% allocated. URA has more liquidity, but URNM is right on their tail. They've grown immensely. In fact, I believe, well, maybe with this recent pullback, it's not any longer, but one of the best performing ETFs this year, period, from all sectors, and it's better managed, let's say, than URA. And then you have a variety of you have about 60 other equities within the uranium space that are publicly traded. And those range from small cap explorers, $5 to $10 million market caps that have a little piece of land that they may or may not drill on and may or may not hit something. That's, obviously the most risky, but if you invest in a small cap miner and they hit something significant, the gains can be phenomenal. Then you have developing companies that have already proven out an asset and are working towards bringing that into production. And then you have producing companies, which there are very few. Cameco, basically. There's other companies that produce, they're just not publicly traded. BHP produces uranium from their Olympic Dam mine in Australia, but they're not really considered a uranium company because they're such a huge multinational conglomerate that's mining all variety of minerals on all continents. So the type of companies that we like and that we recommend are companies that we feel will have positive market influencing catalysts during the bull market. So we like the companies that have management that acts respectfully towards shareholders, that management owns a decent chunk of the company, that the share structure is not totally blown up with huge counts of shares and a large percentage of outstanding warrants and options that can kind of overhang the stock. And then we like the companies that have management that has a plan for how to stay relevant in the market during the bull market. So whether that's acquiring other projects, whether that's moving their project forward, maintaining relevance in the market is extremely important. And that's something that we really look at. And so we've done really well. I mean, if we look at a 3-year time frame, of the top 7 performers in the uranium space, we own 5 of them. And so I think that our process for choosing these stocks is pretty ironed out and working pretty well. So yeah, and then there's all varieties of risk and all varieties of liquidity. If you buy the big, large caps, usually that's the less risky and has far better liquidity. So if you're coming in with really, really large amount of capital, then you probably want to go for the most liquid stocks, not necessarily speculating on the smallest and hoping for the best in terms of exploration successes and things like that.
All right, thanks, Justin. My next question, it's more kind of a fun one here. I need a golden prediction. How long will it take to return to a uranium spot price of $147 per pound?
Less than 18 months, because I believe that the vehicle that Sprott has created is only going to be more and more recognized by the financial community, that investments into that vehicle literally equals physical uranium purchased. And we often see money come into the ETFs just before or during the same time period that it's coming into the Sprott vehicle. So what that means to me is that there's large institutional players that are taking positions in the ETFs because they're the only liquid thing that can justify a large investment in this space. We're still under a $40 billion market cap for the entire space. So maybe they nibble on the large caps, but mostly it's the ETFs. And then they buy the Sprott Physical Uranium Trust, which is also becoming a highly liquid vehicle that equals physical uranium purchases. The spot price moves up, all of their equities positions move up. It's really a perfect storm. It's really an intelligent creation that they've done here. And so it's, in my opinion, it's just a matter of time, and it's already happening, but it's just a matter of time until that flywheel is created where this money just rolls into this vehicle and it just moves everything up simultaneously. And I think it also happens to be within this energy trade that I think is going to continue to be quite robust in the coming years. And why 18 months? I just think that that's how long it'll take to move the price that much, because the market is so thin. It's not going to take, in relative terms, a lot of capital to move the spot price significantly. So I think, I'm just sort of imagining, I don't have a crystal ball here, but I'm seeing a 3 to 5 month leg up coming shortly here, likely a correction after that in uranium and all things, Q2, Q3, and then a resumption of the commodities and broad market bull markets that could also line up with a New York Stock Exchange listing for the Sprott vehicle. And if that all happens, then gosh, that correction will be the ultimate buy the dip. But I think we'll see kind of a higher high next few months, a correction, a consolidation, and then the next leg will just be absolute game on with massive institutional money coming into the sector and into the Sprott vehicle, and we'll see the spot price explode. But we could still see a good move in the spot price, like Craig Perry is mentioning, in the next few months. That's entirely possible. So he's saying $80 in the next 2 months. That's substantial. I'm not calling it. I think we see a higher high. I think we go 55, 60, but I've been wrong too on the spot price predictions. I did not think it was going to go to $52 a pound in 4 weeks from 32 in August and September. So my predictions on that have not been all that accurate, but it doesn't really matter because our equities positions have performed extremely well. So I don't really care if I predict the exact spot price high and when it happens. That's not my investing thesis.
No, for sure. And it's definitely a really, really hard sector to predict, right? I think the theme here for all our listeners is, a little bit more patience, a little bit more time. It's coming. We're so close, right? We're almost at the end of the tunnel, and just keeping that courage, keeping that patience, because it's almost there. All the fundamentals are lined up. So Justin, moving to my next question, everyone's got a mentor. And I know at the start of the podcast, you were starting to talk about one mentor, but who are your greatest mentors and where do you suggest that any investor goes to better educate themselves before making any investment decision?
I would say, well, first, primarily, my biggest mentor in terms of investing has just been failure. I think that to have big wins when you first start trading or investing is almost one of the worst things that can happen to you, because you get a false sense of accomplishment and a false sense of confidence. And that did happen to me. I mean, I traded on some speculative stuff, just momentum trades, and made a quick double in a month or two, and just like the first year that I was trading, and I was like, oh, I thought I was hot shit. But um I think it's extremely important to try to analyze not only successes but also especially failures in terms of investing, and understand what you did wrong and how you can address that going forward. And a lot of failures are, a lot of losses, I should say, are not failures. I mean, there's plenty of losses that are successes as well. I mean, if you take a position based on a certain fundamental reason for the company or the sector or whatever it might be, and then you exit that position at a loss because the facts changed, that's not a failure, in my opinion. That's absolutely a success. Did you make money on it? Maybe not. But did you get out for a reason that justified not positioning any longer based on why you got in? Then that's, to me, that always feels really, really good from a mental psychology perspective. Same thing with a technical trade is you've got, I was taught to enter a trade based on whatever reason you enter it, right? So for me, that was usually a bullish rising wedge was like my favorite pattern. Either that or a gap up pullback. So if something gaps up and pulls back down, then I'd always go in, especially if the volume was there. But if whatever reason you get in, you set your stop loss at a level that will, if you get stopped out, you won't lose more than 1% of your entire portfolio value. So that sets the level of the stop if it closes on a daily close past that level, not intraday. And don't put the stop loss in the market because you'll get bumped out and it'll close green. It happened 100 times to me. So if you do that and you get stopped out and you lose on that position, hey, you followed your own rules. That's a win, in my opinion. And if your trading if your trading methodology works, 3 times out of 4 or 2 times out of 3, then you're going to make money. So that's kind of a long-winded answer. I would say that my own failures have been the biggest mentor to me. With that said, there's people that I met on Twitter that I'm just going to, keep them anonymous. That there are very, very intelligent, very successful, very wealthy, anonymous people on Twitter that are in the uranium universe that I've been conversing with and speaking with over the phone and communicating with for years now, that have taught me so much. Taught me not only about uranium, but just about investing. And so that's probably the community that I've created and has come to me naturally, that I've been blessed and lucky enough to be exposed to, has a number of people in it that I would consider mentors in terms of investing.
That's awesome that both yourself as well as other people part of your community have had a huge impact on your investing career. That's great. So Justin, as you know, the purpose of this podcast is to inspire people to achieve greatness and enhance their overall personal well-being. So what is your definition of greatness?
Gosh. I think that my definition probably has changed in the past couple of years. More than anything right now, I really appreciate courage and people that are courageous. I think that people that tell the truth no matter what is really, really inspiring to me. And I think that there's everyday people that are standing up for what they believe in right now that I think are just absolute heroes, far more than what you might consider a traditional hero. So greatness to me is somebody who is disciplined. I think discipline is extremely challenging And I think it's something that without discipline, you really can't achieve greatness in pretty much anything, whether that's in your financial life, in your career, in your personal life, with your physical fitness, with relationships, with friendships. You have to actually have discipline and be truthful. That's a great question. I think I'll leave it at that.
Yeah, that's great. Awesome. And so, Justin, who is a future guest that you would like to see on this show?
I mean, I think it would be a really interesting conversation to hear. Have you had Michael Schellenberger on the show? He's an environmental advocate and who's now kind of discussing nuclear a lot, and as a strong supporter of nuclear, but he knows the math inside, outside, and backwards, and he's really shifted because he came from a more traditional environmental perspective, which is nuclear bad, and he's now completely done a 180. That would be really interesting to hear the background in his story, actually, even more so than his reasoning for his stance currently, but just how he arrived there would be really interesting. Gosh, on the spot, that's a tough one. Greatness. I'm drawing a blank. There's so many. I mean, I would love to hear of some everyday people who are starting to kind of shake things up just by standing courageously for what they believe in, and when most of society and government is kind of against that. And I don't want to say any individuals, but there's plenty of examples in your country. There's plenty of examples in my country. That would be really fascinating to just hear people talk about the challenges that they've had in this past couple of years, and what has inspired them to sort of buck the trend and come out and risk their careers, in some cases maybe even risk their lives to tell the truth. It's like, those are the people I cannot stop listening to. Okay. Dr. Zach Bush would be a phenomenal guest. I think you would really like him. He's very, I just cannot stop listening to him. He's very eloquent. He has a very gentle delivery. He's very environmentally conscious. He's very holistic. And he's somebody that, regardless of where you sit on anything that's been going on lately in the world, you just want to like curl up next to a fireplace with a blanket and just hear him tell you everything that he knows. He's just like an unbelievable human being. Very courageous, very intelligent, very wholesome. He'd be awesome.
That's awesome. Well, you gave me a good list, and those are all great individuals. So I will do my best. I will let you know if I could get any of them on. And Justin, what is the best place for my listeners to connect with you online? Even if you want to share a little bit about your newsletter, where to go.
Sure. Well, I'm pretty active on Twitter, so at Uranium Insider. There's a huge, fantastic investing community in general on Twitter, especially the uranium Twitter is really, really great. A lot of generous people sharing very high quality information there. Our website is uraniuminsider.com. Yeah, if any of your listeners are interested, they can send us an email at support@Uranium Insider, and we can send them a sample newsletter so they get an idea of the type of content we put out. And I can be reached through that same email as well.
Okay, perfect, Justin. So I'll make sure to include all that into the podcast notes so everyone has access to that. And Justin, I really do want to take the time right now to really thank you for your time. I know it's been a pleasure for both myself as a learner as well as everyone else listening to hear more about the uranium market and kind of what's going on. So yeah, I really just want to thank you for your time today. Thank you for being here. And thank you, just for everything.
The pleasure is all mine. It was a great conversation. I appreciate you having me on.
Thank you for listening to the Living Your Greatness podcast. If this show has added value, please subscribe, leave a rating, and make a review. This podcast is for informational purposes only and is not to be considered personal, legal, or investment advice or a recommendation to buy or sell securities or any other product. It is based on opinions, current events, press releases, and interviews, but is not infallible. It may contain errors, and Living Your Greatness offers no inferred or explicit warranty as to the accuracy of the information presented. If personal advice is needed, consult a qualified legal, tax, or investment professional. Do not base any investment decision on the information contained on Living Your Greatness or our videos.